Swiggy management, Rohit Kapoor, on NDTV Profit a short while ago. But we want to continue this conversation with a view from an analyst who tracks the space. I'm just going to pull up the Swiggy stock very quickly. The company is saying that this is not going to be a constant situation. Their losses have widened this quarter. That's why you're seeing some pain point, but there's been a recovery from the lowest levels. Shobhit Singhal, research analyst at Anand, Rathi Institutional Equity, is joining us now to talk more about Swiggy. Shobhit, good morning to you. I hope you've managed to hear some of the conversation we had with Rohit Kapoor. You've obviously looked at the numbers. Let's start with your analysis of the quarter.
Yeah, hi, good morning. Yeah. So we believe that it was a mixed set of results. They have performed strong in the food delivery. So they have reported around 19% kind of year-on-year GOV growth versus Zomato 17%. So we believe that they have gained some market share largely because of that recently launched Bolt, which is 10-15 minutes delivery. And it constitutes now around 9% of the overall volumes against 5% in Q2. And also, in this space, they have expanded around 85 to 90 bips of margin expansion, which we believe is good. But on the negative side, this margin expansion was offset by the higher losses in quick commerce. So adjusted EBITDA margin losses extended to 14.6% against 10% in Q2 FY25. And they also lag in GOV growth in quick commerce. So they have reported around 88% growth year-on-year versus 120% growth, which Blinkit has reported. So overall, it was a mixed set of results. And we believe that though the margin expansion in food delivery will continue going forward, but the losses will remain at this level for at least for more 1 or 2 quarters because of the heightened competitive intensity in this segment.
Now, how would you look, Shobhit, at quick commerce segment for Swiggy versus Zomato?
So we believe that, if you see, so even Zepto is aggressively expanding in dark stores. Okay. So Blinkit, if you see, so they are now around plus 1,000 dark stores. And Zepto as well, they are around 800 to 900, and Swiggy around 750, 760 type. Okay. So we believe that industry will continue to grow around 60 to 80% going forward. But Blinkit will be the leader because of their higher SKUs as well as the dark stores. And we believe that Instamart will continue to lag in terms of the GOV growth versus Blinkit going forward as well.
I'm just wondering, Shobhit, what is the metric that you are watching as an analyst right now? Swiggy's widening losses, of course, comes at the cost of adding more dark stores. They clearly have to if they have to deliver faster. And the impact of Bolt can already be seen. It's already 9% of revenues. Do you see this as a downside as losses widen, or do you see this as a cost of doing business which will pay off in the next few quarters?
So in the food delivery, the margins are expanding. So even for Zomato, and for Swiggy. So we don't see any problem in the food delivery space, and we believe that this duopoly will sustain going forward as well. But in quick commerce, given the huge market opportunity size, so we are talking about $40 billion to $50 billion in next 5 years. So there will be the heightened competitive intensity, and we believe that around 4-5 players can coexist, right? So the losses will remain at this level at least for some maybe 1 or 2 more quarters until the competitive intensity gets stabilized. But here in the e-commerce, in the quick commerce space, we need to see the AOV growth going forward.
Now, Shobhit, just one question. Somewhere around Diwali, right, or the last quarter, the possibility of currently non-present but going to be present large corporates in this quick commerce, quick delivery space started to become prevalent. Now, the question is, do you fear that may push back the profitability for all 3 incumbents to a much further quarter than what was earlier envisaged? And could that hit multiples or price performance for the next 12 to 18 months?
If you see the stock price of both Zomato as well as Swiggy, so that losses that extend losses at least for next 2 or more 3 quarters. So delay in profitability. So that is actually reflecting in the stock price currently. So Zomato has corrected from 300 levels, and Swiggy has corrected from 600 levels. So which we believe that now the stock price is reflecting of the delay in the profitability at least for next 2 to 3 more quarters.